In this video, I would like to explain multi-manager investing, why it works and why it matters. When we talk about multi-manager investing, it's a strategy that it involves, fund managers or portfolio managers, you know, coming together to manage a portfolio with each of them having his or her core uh, expertise or skill or knowledge. A number of managers coming together to manage a portfolio, and each of those managers tend to specialize, in a given investment area. They have different expertise, different skills that could, if combined together, form a synergy would benefit the overall portfolio performance. This approach allows for diversification across different investment styles, across different assets or different strategy within a single fund, which can profoundly, reduce risk and enhance returns. So the key features of multi-manager investing involve: number one is diversification. So by utilizing different managers, the fund can invest across a variety of strategy, reducing reliance on any single investment approach. Take for instance, you may have a growth investor, a value investor, a momentum investor, probably a swing trader, all coming together to manage a fund. By the time they pull their strategies, they harness their expertise, their knowledge and skills, the fund will end up benefiting tremendously from these combination of strategies in a single fund. And this will eliminate reliance on a single strategy. So in case a single strategy fails, it might lead to a negative outcome for the fund. But in the case where you have different strategies, different managers coming together with different core areas of expertise to manage the fund, at the end of the day, we should expect a better performance from that fund. We equally have, expertise. Expertise here, each manager is selected based on their expertise, on a particular area, whether it is a specific asset class, a region, or investment style. This expertise will be related to different asset classes. People specializing in different asset classes, they may equally specialize based on their individual regions. They can equally specialize based on investment style. As I told us earlier, it could be a value manager, a growth manager, a momentum investor, different kind of investment strategies. The individuals could specialize in. We equally have risk management. The multi-manager structure can help in managing risk by spreading investments across different managers who may have a different risk profile and investment philosophies. So these managers have their individual risk profiles. They have their individual, investment principle or philosophies. By so doing, you discover that is that risk mitigating factor in the entire scheme. They tend to mitigate risk because of the expertise they bring in, the skills they bring in, and the individual risk tolerance they bring into the equation. The next one is performance potentials. Performance potential, the combination of various investment strategies can lead to more stable performance you have a more stable performance, you have a more predictable performance. As the strength of different managers, could be harnessed to complement each other. So the synergy there is very, very it's quite advantageous. You see, and so the key features is diversification, expertise, risk management, as well as some performance potentials. I want to look at examples of multi-manager investing. Typical example is what you call fund of funds. Fund of funds. These are mutual funds or hedge funds that invest in a portfolio of other funds managed by different managers. In other words, this the fund of funds. Now, this fund of funds invest in other mutual funds that are managed by managers with different skill sets, different focus, different teams, different factors, different emphasis. So these umbrella funds, is known as a fund of funds. A fund investing in different other funds. Another example is multi-strategy hedge funds. Multi-strategy hedge funds. These funds employ, several investment strategies, managed by different teams, all within the same structures. They adopt different strategies, managed by different teams or managers, and they are all within the same structure, the same company, the same firm. All right. So let's look at the pros and cons of multi-strategy investing. When it comes to the advantages, the pros here, number one is enhanced diversification. You have the diversification across different skill sets, different individual with different, level of expertise, with different knowledge, of different investment strategies. The other one is access to specialized expertise. These are specialists, in their core areas. They are not generalists. They are just specialists in their core, investment areas. You equally have potential for more consistent performance because of the fact that these people come together to harness, their expertise. That synergy, will then help them to be able to perform better, to deliver stable, stable performance over a given period. Now, I want to equally highlight the disadvantages. Number one is high fee due to multi-management layers. Many managers involved, different management layers will certainly attract fees, higher fees. Number three is complexity in fund management. It's somewhat complicated. It's not that straightforward like a single strategy fund because it incorporates different individuals, different strategies, different core competence, and all those things. So it's a kind of, it's somewhat complicated. Number three is potentials for overlapping strategies or lack of coordination between managers. There could be that lack of coordination. Their roles and functions may even overlap. There is that possibility. So we should consider this particular factor as well. So would you like to explore, this particular? Will you want to, invest with, with a multi-manager kind of with a fund that involves multiple managers? Well, the choice is yours. If you want stable returns, if you want, kind of potentials for higher returns, if you like expect or you seek that increased diversification, then this particular strategy, could be for you. Please like this video and subscribe to this channel it will do me a ton of good. It will encourage me to keep on bringing videos of this nature to you.